What is going on, investors? My name's Emmanuel, and guys, I am back. I am back in my office. If you've watched any of my recent videos, you may have seen me on the back of my van, so I apologize. But I am back, and I've got an incredible video for you today, investors. I'm going to be sharing with you my top 2 favorite exponential growth stocks for October. They're exponential because one is in a disruptive industry that is currently growing at double-digit rates, and the other is a stock that will continue to benefit from the work from home, the stay-at-home economy. And in my view, it hasn't quite taken off just yet. But both of these stocks are well positioned, in my opinion, to take a large chunk of the market share. Plus, they are still at the beginning stages of their growth phase. There is a massive runway ahead of them, and early investors will hopefully benefit from their exponential rise within the next few years. But a quick disclaimer before we jump into it, I have already begun building a position in both of these companies, and if you do follow me on Instagram or on Twitter, then you already have the inside scoop. So yes, that is a quick plug. Follow me on Twitter or Instagram if you don't already. The links are in the description below. So investors, we do have a ton of information that we need to get through in this video. It's going to be an in-depth look and analysis of both these companies. So right before we do jump into the analysis, please don't forget to smash the like button. It helps me know that you really enjoy this type of content. And also, if you are new to the channel, then hit that subscribe button to stay up to date with more stock analysis content, as well as any major stock related news. No matter where I am, anywhere, I will keep you updated, all right? Especially if it's stocks that we cover in this channel. So with that said, thank you so much, and let's dive into the video. So the first company I want us to analyze is called Tattooed Chef. Now, Forum Merger 2 is the special purpose acquisition company, or what we know as a SPAC, that will be taking Tattooed Chef public. Now, there's a key point that you need to be made aware of regarding this specific merger, and I will address it later in the analysis. But if you do want to invest in Tattooed Chef prior to the merger, then the ticker symbol is FMCI, okay? And it's currently available on trading212 and IG Markets in the UK, as well as any major online US brokerage platforms, I think even Robinhood. So with that said, let's take a look at the company profile for Tattooed Chef. So Tattooed Chef are a disruptive food company, and the industry that they are mainly disrupting is the animal-based food products industry, because they are focused on plant-based food, like, you know, your plant-based meats, your burgers, pizzas, stir fries, and whatnot. And according to the Good Food Institute, who provided an in-depth study of the plant-based food industry, they concluded that this industry is, quote, a booming business. And they also found that the dollar sales of plant-based food grew by 11% in the past year and 29% over the past 2 years. Now compare that to the normal US food sales sector. They grew only a whopping 2% within the past year and only 4% over the past 2 years. So when you compare both industries, it's crystal clear that the plant-based food industry is growing at a much faster pace. I mean, double-digit pace to be exact. And it's starting to take a huge chunk in the market share of a $55 billion industry. I mean, that's crazy. And as more and more people are starting to warm up to the idea of plant-based food, there is literally no stopping this sector, in my view, okay? It's almost reminiscent of the EV sector taking over the internal combustion engine sector. It's pretty much inevitable. Whether you're a petrol head and you dislike EVs, it's going to happen. So with that said, another key point from their presentation that I want to highlight is that they are brand focus with a proven private label capabilities, to which they expand on page 15. So I'm going to take you there now. Now, this really puts this company's progression into perspective, in my opinion, because if you look at 2017, 93% of their sales was from private labeling. So in places like Costco, your Walmarts, your Sam's Clubs. But over the years, they began to build their Tattooed Chef brand. And by 2019, their Tattooed Chef brand sales equated to 26%, which is simply incredible. And they actually clarified it here in the statement. Tattooed Chef's growing reputation in the food industry has led to it being approached by multiple retailers that request the company to sell both its branded and private label products in their stores. I mean, That is just phenomenal. And also, their expected results based on this year's current trajectory is that their branded products will actually now exceed the sales of their private label products in just a space of 3 years. So I think this company is simply incredible. They have proven that people love their products through the sales of their private labeling, and now they are proving that people actually love the Tattooed Chef brand. And speaking of a brand that people love, I actually visited their Instagram account just to see what people are saying regarding their products. And if you take a look at their IG comments right now, I mean, you can see that people are genuinely raving about their products. It's nothing but praise. And I mean, people are genuinely falling in love with their food products. They love their branding. I mean, it's not even funny at this point. I personally don't have a tattoo myself, but I think the branding is definitely on point in my view. And if you think about it, the name Tattooed Chef does sound like it could be a household name, especially with millennials who are now starting to have kids. So with that said, let's take a look at some of their product ranges. So as of recording, they have 12 products. I mean, they have a cauliflower crust cheese pizza. I ain't gonna lie, guys, that sounds disgusting to me. Like that sounds terrible. Again, they have a plant-based burger as well. I can't lie, guys, it's hard for me to get excited about plant-based meat, but clearly with this industry growing at double-digit rates, the problem is obviously with me and and my taste buds. I mean, I just love meat, I guess. These are the ranges of products that Tattoo Chef are currently offering their clients, their customers, and they do plan to innovate and roll out more products in the near future. So I ain't gonna hate. I'm not gonna hate, all right? All right, so we have established what this company is all about. We've taken a look at the different type of products that they offer their clients, and also the fact that customers are raving about their products on social media. So far, Tattooed Chef, you have to agree with me, are ticking all the right boxes. And we now need to take a look at their current financial overview. And of course, compare it to one of the biggest competitors in this market, which in my opinion, you may have heard of the company, is called Beyond Meat. Beyond Meat are the biggest players in the game. So let's start off by comparing the first half of their 2020 to the first half of 2019. And their net sales sat at $67.9 million, which is a 104% increase compared to $33.3 million in the prior year. Now, comparing that to Beyond Meat, which I believe again is Tattoo Chef's strongest competitor, their revenue grew by 142% year on year. So Tattooed Chef is not far behind Beyond Meat from a revenue growth standpoint, in my opinion. But if one thing is clear, looking at the revenue of both companies, is that the plant-based food industry is absolutely on fire right now. I mean, year-on-year growth rates of 100% or more, that's not common in a lot of sectors, especially in a time like this. So this provides me with even more confidence about this sector. Okay, so let's look at the adjusted EBITDA, which was 9 million. And if you compare that to the prior year, it was 2.4 million, which is also, again, fantastic. And it can be said that from a sales perspective, they have had a solid start to 2020. And as an investor, this is something that you really want to see. Now, the downside to this investor presentation and most investor presentations for SPACs that I've noticed is that they generally don't provide information regarding their balance sheet and also their cash flow statement, which for me, it does boost the risk with investing in this company because, again, we have no idea what their cash position or their debt position actually looks like. You know, we have no idea whether they have enough total current assets to cover their current liabilities. We don't know whether their stockholder equity has been increasing year on year or whether it's been decreasing. So we don't know whether the assets are growing faster than the liabilities. Again, we have no idea whether they have positive free cash flow, and we won't know until the merger is complete. So, and when they actually go public, I believe. So that is one of the biggest risks you're taking if you decide to invest in Tattooed Chef pre-merger, in my opinion. Okay, so it's obviously not all sunshines and rainbows with this company. I mean, until we see what their balance sheet actually looks like, as well as their cash flow statements, there is increased risk with a potential investment. Like let's just call it as it is, okay? However, if there is one thing that I've learned from the whole Nicola situation that's taken place, is that we need to pay close attention to the people that are steering the ship, especially when it comes to companies that are merging. So with that said, I do want us to take a quick look at the experience of the leadership for Tattooed Chef. All right, so first impressions for the CEO is great. He has 35 years of experience within the food industry. He has experience from an operational standpoint and also from an investor standpoint. So this is very, very good to see in my opinion. And now moving on to the CCO, and I do like the fact that the creator of Tattooed Chef, Sarah, is still heavily involved in the business, and it states here that she was the brains behind steering the company into the plant-based food industry, which is obviously proving to be the right direction and the correct decision. So from an investor's point of view, it signals that they pay attention to the changing trends within the food industry, and they are able to effectively adapt to these changes, which is again another green flag for me. And the COO also has a ton of experience within the food industry. It says here that she has 12 years under her belt, which again is decent. I mean, it's not as much as the CEO, but it's experience nonetheless. And the CFO doesn't look too bad either. He has 30 years of financial and operational experience. Now, he is also the current CEO at Sunworks, and that's a solar energy company, and it's completely unrelated to the food industry. However, he did successfully lead Sunworks into winning a contract in their recent Q3, which is the company's best performing quarter since the Rona kicked in. So I do very much like this guy's credentials. He clearly knows how to win multi-million-dollar deals, but I am a tiny bit concerned that he's split between two companies. And remember, it currently is a SPAC, which means merging with FMCI. So now here are the risks regarding this SPAC that I alluded to earlier. Now, the dangers with this SPAC in particular is that they may not get enough votes for the merger to go through successfully. And therefore, you could be in danger of holding on to shares in an empty-shelled company. And this exact thing actually happened previously when FMCI actually attempted to merge with Tattooed Chef. I believe it was in September, so last month. So the merger actually failed due to them not being able to secure enough adequate votes from the shareholders. And of course, the share price plummeted as a result. However, this time around, I am reassured that this attempt will go through because David Boris, according to this presentation, has 30 years of experience dealing with mergers and has been involved in over 20 SPAC transactions. So to be honest, investors, that does definitely settle a little bit of nerves for me. And I do think the second attempt will go through. I do believe the second attempt will be a success, but you definitely have to bear that in mind as another risk that you'll be taking if you do decide to invest in this company pre-merger. If that worries you, then it's probably best to wait for the merger to happen. I believe the merger is taking place this month on October the 15th. All right, investors, so moving on from Tattoo Chef, the next stock that I believe has exponential growth is a company called Upwork, and the ticker symbol is UPWK. Now, before we dive into the analysis, I must confess, I have had Upwork on my watch list since last month when it was around $16 a share, and it's now currently trading at $20 a share. And the reason why I didn't bring this stock to your attention till now is simply because the company still isn't profitable, especially at a time where I think that it should really be making a killing. But then I started to compare Upwork to its closest competitor, which is Fiverr, and I also discovered that Fiverr also isn't profitable yet, although they are very, very close. But another thing that I discovered was that Upwork also makes a lot more money than Fiverr. I mean, in their most recent quarter, the revenue for Upwork was $87 million. Now compare that to Fiverr, who made just over half of that at $47 million. Yet Fiverr's share price is currently sitting at $161 a share with a $5.67 billion market cap, while Upwork is sitting at $20 a share with a 2.43 billion market cap. So I thought to myself, you know what? It's time to take Upwork quite seriously, okay? Especially as I actually have, I won't lie, I have actually used their services for one of my businesses before. So if you're not familiar with Upwork, they essentially started out as a small internet platform and was known primarily as a gig-based freelancer site for remote workers and also for assigning temporary contract work to contractors. So in other words, if you have a skill, you could advertise your services on Upwork and companies would be able to reach out to you to assign you for temporary work. So for example, Like I revealed in my live stream, I do have a wedding photography business. And I used Upwork to find skilled photo editors and people to cull my photos. So that's what Upwork was primarily known for. Now, however, as many more companies start to explore the possibilities of filling their work roles with remote and temporary skilled contractors, so companies like Upwork, like Fiverr, are fast becoming the go-to for sourcing these skilled, talented contractors. And the CEO of Upwork also highlighted in their most recent Q2, and he said this: "We capitalized on the global shift towards remote work and the widespread need for flexible talent solutions, welcoming a surge of new customers." This is music to my ears. We remain laser focused on executing our vision to being the number one flexible talent solution in the world, which is more critical than ever as companies need help managing their expanding remote workforces. So the CEO identifies the increasing demand for remote work, which led to a surge of new customers signing up to the Upwork's platform. And this, from an investor's point of view, is very, very good to see. Because if you think about it, investors, a demand or surge in new customers pretty much means a surge in revenue. And according to the UK freelance statistics for 2020, there are currently over 2 million freelancers in the UK alone. Most of the popular skill sets in business support, which is 22%, design is 20%, writing and translation is 17%, and sales and marketing is sitting at 13%. All of these skills are vital for businesses right now, and Upwork is one of the leading platforms for connecting companies to these skilled freelancers. So with all that said, let's now segue into Upwork's company's financial performance. And their revenue has grown quite significantly from this year's second quarter in comparison to last year. It's sitting at 87 million versus 73 million from last year, which also reflects on the first 6 months of this year, with revenue sitting at 170 million versus last year's 142 million. So again, this is quite significant revenue growth. And the CEO actually did mention in the earnings call that their target is a 20% year-on-year revenue growth, which again would be incredibly amazing if they can achieve this. Now, I did mention that the company isn't profitable despite their growing revenues, and they did make a net loss of 11 million in Q2, which is significantly higher compared to last year, where they had a net loss of only 2.4 million. And if you look at the income statement, you can see that the reason for the net loss comes directly from their operation. I mean, they lost $10 million alone on operations. So your general admin, your sales and marketing actually took the biggest chunk. The R&D also cost 20 million. So it's pretty clear that the management of Upwork need to get a grip on the spending on their operations, because that will significantly improve their bottom line. But I think the biggest strength in this company's financials is in their balance sheet. All right. So let's take a look at their balance sheet right now. Their cash and cash equivalent totals $146 million versus the debt, which is only $39 million. So they could quite easily clear off their debt if they wanted to, so they have no debt, which to me is a brilliant position to be in, considering everything else that's going on in other businesses right now, where they're just laying off staff and making people redundant. And they do have a solid current ratio, which is sitting at 1.74, and that essentially means that their total current asset does exceeds their total current liabilities. And lastly, their stockholder equity has also been increasing year on year, which again is another indicator to investors that their assets are growing much faster than their liabilities. So again, these are all green flags for me as an investor regarding Upwork. So investors, I hope you gained a ton of value from my in-depth analysis of both of these companies. I have started to build my positions in both these companies. I currently own just 50 shares of FMCI, which again is Tattooed Chef, and I'll be looking to load up on my position post-merger, but I just don't feel entirely comfortable loading up without seeing their balance sheet or also their cash flow statements. And I did pick up 50 shares of Upwork yesterday on the dip, and my goal is to build my Upwork position to at least 100 shares, maybe 150, maybe 200, all right? Especially as the price gets cheaper, because I do think that demand for Upwork services will increase rapidly as more and more people are being made redundant, and seeing freelance work as their only alternative option at the moment, because it's really hard to find anyone hiring right now, as well as companies are starting to convert permanent work to subcontractor work and encouraging people working from home. So I do believe that Tattooed Chef and Upwork have exponential growth ahead of them, especially within the next 3 to 5 years. And that's my thoughts and that's my analysis. So I hope you enjoy the investors, but please make sure you do your own due diligence before you decide to invest in any stock or any company. Said it before, I will say it again. I am not a financial advisor. Please view my content as purely educational and not investing advice. If you do want to learn about investing in stocks, then there are some useful links in the description below. Plus, my broker trading212 will send us both a free share if you sign up using the link in the description below. So with all that said, don't forget to smash the like button, hit the subscribe button and the notification bell if you want to see more content from me. Thank you so much for watching, and I'll see you in the next one. Peace.